All right, everybody, welcome back to Talk Tickers. We usually spend our time, deep diving into earnings calls, but today we've got something a little different. We've got some pretty big breaking news to cover.
Yeah, definitely a bit of a curveball.
Yeah, for sure. And that is, of course, Smithfield Foods going public with a US IPO.
Big news.
Big news. Yeah. So, Smithfield Foods, of course, the company behind brands like Farmland Bacon, Farmer John sausages, they've decided to file for a US IPO, which is particularly interesting considering they've been privately held by WH Group for over a decade.
Kind of a full circle moment, right? Back to the public markets after all this time.
Exactly. They were public, they got taken private, and now they're coming back to the public market.
Yeah.
So before we, start speculating wildly about, what this all means, maybe we should give everyone a little background on, Smithfield's journey.
Sounds good. Yeah. So Smithfield, they were actually a publicly traded company listed on the New York Stock Exchange. But that was until 2013 when WH Group, which is actually the world's largest pork producer.
Wow.
Yeah. They're based in Hong Kong, and they acquired Smithfield in a deal worth $4.7 billion. That was a massive deal at the time.
Yeah, that was a big one. So they were public WH Group, swoops in, scoops them up, takes them private. And now here we are, over a decade later, and they're going public again. But there's a bit of a twist this time. Right?
There is. It's not the whole Smithfield empire going public this time around. It's specifically their U.S. and Mexico businesses that they're spinning off.
Interesting. So it's kind of like a partial IPO in a sense.
Yeah, exactly. And they're planning to list on the NASDAQ this time under the ticker symbol SFD. Now their filing suggests they're looking at a valuation.
Oh, yeah. What's the number looking like?
At least $5.38 billion.
Okay. So not a small chunk of change by any means.
Not at all. And get this IPO could represent up to 20% of Smithfield's shares.
Okay. So this isn't just, little, dip their toes back into the public market. This is a pretty significant portion of their operation.
For sure. So, the big question on everyone's mind is why now?
Yeah. What's driving this move? What are they hoping to achieve? I mean, the market's been pretty volatile lately. So it's an interesting time to be going public.
Yeah, it's definitely a bold move. But there are a few potential reasons that come to mind. First off, WH Group hasn't exactly been having the easiest time over in China. The Chinese pork market's been struggling a bit. Consumer demand is down. And this has actually led to some losses for WH Group.
Oh, wow. I didn't realize that.
Yeah, it hasn't been making headlines, but it's been happening. So this IPO could be a way for them to unlock the value of Smithfield's U.S. and Mexico businesses and, gain access to some additional capital.
It's like a strategic financial maneuver.
Right.
Right? Like using the U.S. market to potentially offset some of the challenges they're facing in China.
Exactly. And tap into a new pool of investors as well.
Yeah, it's like hitting the refresh button on their financial strategy.
And let's not forget about the political climate. There's been a lot of discussion and debate in the U.S. about Chinese ownership of American farmland. And remember, WH Group owns a substantial amount of land through Smithfield.
That's right. They've got a pretty big footprint here in the U.S.
So this IPO could be seen as a way for them to kind of, address some of that scrutiny.
Like almost like a PR move in a way.
Potentially.
Yeah. Trying to kind of demonstrate their commitment to the U.S. market.
Right. And alleviate concerns, show that they're willing to play by the rules.
Yeah. It's like they're walking a tightrope.
Yeah.
Trying to tap into the U.S. financial system while also navigating the complexities of U.S.-China relations.
There's a delicate balance for sure.
No doubt about it. But, before we get too deep into the geopolitical weeds and the political machinations behind all this, maybe we should take a step back and, focus on the numbers.
The fundamental.
Yeah, exactly. Because at the end of the day, an IPO is about, attracting investors and, convincing them that you're a good investment.
Absolutely. So let's look at Smithfield's financial performance. For the 9 months leading up to September 29th, 2025, they reported a net income of $581 million.
That's not bad at all.
No, it's not. And that was on sales of $10.19 billion.
Okay. So they're clearly not, hurting for cash. They're in a pretty solid financial position going into this IPO.
Yeah, the numbers are looking pretty good.
So those are some pretty solid numbers. I mean, it looks like Smithfield's in a pretty good spot as they get ready for this, this public offering.
It'll be interesting to see how investors respond.
Yeah, for sure. Now, before we move on, I'm curious, what are they planning to do with all the money they raised from this IPO? Any hints about their plans?
They have actually. Smithfield has said that they plan to use the IPO proceeds for capital investments.
Okay, so they're not just going to, sit on a pile of cash.
Sure.
They're actually going to put it to work.
That's the idea. And these investments could include things like upgrading their infrastructure, implementing more automation in their facilities, and potentially expanding their production capacity.
So basically laying the groundwork for future growth and efficiency.
Exactly. And there's been some buzz that they're particularly interested in focusing on their packaged meat business. Yeah. They've been reducing their hog supply, which could be a way to cut down on operating costs.
Yeah, makes sense.
And really hone in on that higher margin packaged meat segment.
Smart move. Especially with all the uncertainty in the, hog market these days.
Absolutely. Packaged meats are a bit more stable and potentially higher growth.
Longer shelf life, more convenient for consumers.
Yeah.
And let's be honest, there's just something about that, that grab and go convenience that just appeals to people these days.
For sure. So we've got a lot to unpack here. Smithfield, a major American food company with ties to China, spinning off their US and Mexico businesses and going public, aiming for a hefty valuation with strong financials, planning to invest in growth and efficiency. But there's also that geopolitical backdrop and those strategic shifts in their business model that we can't ignore.
So many layers to this story.
Too many layers. And it's going to be interesting to see how it all plays out. What does this mean for investors? What does it mean for the packaged meat industry?
Yeah, those are the big questions.
We're going to dive deeper into those questions as we continue this deep dive.
Yeah, we've got a lot more to discuss, so stay tuned. We'll be right back. Welcome back to Talk Tickers. Before we start, getting into the, the potential market impacts and all that stuff, I'm kind of curious about, Smithfield's choice to spin off and list their U.S. and Mexico operations while still being owned by WH Group. What are your thoughts on that? Like, what are the implications there?
Oh, that's where things get really interesting, I think. It's definitely a complex situation. You've got, a lot of moving parts. On the one hand, this could be a way for Smithfield to, kind of distance themselves a bit from some of the scrutiny and the, the political headwinds that come with being, a Chinese-owned company operating in the U.S.
Yeah, especially in, agriculture. It's a sensitive sector.
Exactly. Food production. It's, it's a big deal.
Okay.
So by having a separate publicly traded entity for their U.S. and Mexico operations, they can kind of present a more, American face to consumers and investors.
Yeah, it's like they're trying to, have their cake and eat it too.
Right.
Right. Want to keep the backing of, this global powerhouse like WH Group. But they also want to appeal to, those folks who might be a little wary of, foreign ownership in such a, vital industry.
And remember, the U.S. government has been, really focused on scrutinizing foreign investments lately, particularly those from China.
Yeah, they've definitely been cracking down.
Especially in sectors that they consider, critical to national security and the economy. Yeah. And, agriculture definitely falls into that category.
Oh, yeah, for sure. So this spinoff and IPO could be seen as a way to, kind of navigate those, political and regulatory complexities.
Exactly, a strategic maneuver.
For sure. Now, what about the packaged meat market? How do you think this move might, shake things up a little bit?
Well, if Smithfield actually manages to, pull off this IPO and use the money for all those investments they talked about, it could have, pretty significant impact on the whole industry.
Yeah, makes sense.
Think about it. They'll have, a lot more financial firepower to upgrade their facilities, invest in automation, and potentially even, expand their product lines. And that could put a lot of pressure on their competitors to, keep up.
Yeah, it's like, an arms race in the packaged meat aisle. Everyone's trying to, one-up each other with new products and, better packaging and more competitive pricing.
Exactly. And you know what? All this increased competition could actually be good for consumers.
Yeah, how so?
Well, we might see, more variety, more innovation, and, maybe even lower prices as these companies fight for market share.
Okay, so a potential win for the consumer. But what about the companies themselves? I mean, increased competition can be, a double-edged sword.
Yeah, definitely. There are potential downsides, too. Increased competition could really squeeze profit margins for some of the players in the market. It could lead to consolidation.
Yeah, some companies might not be able to keep up.
Exactly. It's, survival of the fittest out there. Only the most adaptable and innovative companies are going to thrive in this kind of rapidly changing market.
And that's where things get interesting for investors, right? Trying to identify those companies that are, best positioned to capitalize on these shifts.
Absolutely. Maybe there's a smaller, more agile company out there that's, developing cutting edge technologies or tapping into some, emerging consumer trend. That's the kind of stuff that, savvy investors should be looking for.
Yeah. So it's not just about, Smithfield itself. It's about, the bigger picture, the ripple effects that this whole IPO situation could create.
It's like, dropping a pebble in a pond and watching the ripple spread outwards.
Yeah, great analogy.
Yeah.
Creating all these new patterns and possibilities.
And the food industry is, it's constantly evolving. Consumer preferences are changing. New technologies are emerging. Global trade dynamics are shifting. It's a dynamic landscape out there.
No doubt about it. So speaking of adapting and innovating, you know what time it is, right? It's time for our This Is Not Financial Advice segment.
Always a good time.
You know that part of the show where we, let our imaginations run wild, come up with an outrageous but plausible trade idea, just for kicks.
I'm ready. Are you ready?
I'm ready. So, you know what I was thinking? What if we take a, kind of a contrarian approach to this whole Smithfield IPO situation?
Okay, I like where this is going.
What if instead of, betting on Smithfield's success, we bet on a competitor that might actually benefit from, the increased competition and market disruption?
Almost like a buy the rumor, sell the news kind of play.
Exactly.
Yeah.
We need to find, a company that's currently undervalued, maybe flying under the radar a little bit, but poised to, really capitalize on the shakeup that Smithfield's IPO might create in the packaged meat market.
So we're looking for an underdog story.
Yeah, a company that's, agile, innovative, maybe even a little bit scrappy. Not afraid to go head to head with the big boys and, steal some market share.
So we need a company with a good story, a compelling narrative that could, attract investors' attention as this whole Smithfield IPO thing unfolds.
Exactly. All right, let's put on our thinking caps and see if we can come up with some potential candidates. We'll dive deeper into this, this contrarian trade idea when we come back.
Sounds good. Stay tuned, folks, for more, speculative fun on Talk Tickers.
All right, welcome back to Talk Tickers. So before the break, we were, tossing around this idea of a contrarian trade, looking for a Smithfield competitor that might be, a little bit overlooked, but, well-positioned to, benefit from all these, shifting market dynamics. Did anything come to mind while we were away?
I think I might actually have the perfect candidate. Let's just call them innovative meats for now, for the sake of this hypothetical trade.
Okay, innovative meats. I like it.
Yeah, so they're, not a huge player in the packaged meat space yet, but they've been, making some noise with their approach. They're really focused on sustainability and ethically sourced products.
Yeah, I've heard of them. They've got a good reputation, right? Like they're really committed to, animal welfare and environmentally friendly practices, all that good stuff.
Exactly. And they've managed to, build a pretty strong brand reputation, especially among those consumers who are, really conscious of where their food comes from and, how it's produced. And here's the really interesting part. They've also been quietly investing in, some pretty cutting edge food technologies.
Oh, really? Like what kind of stuff?
Plant-based protein alternatives. That's their main focus.
So they're not just, appealing to the ethically conscious consumer. They're also, getting ready to ride the wave of, this whole plant-based food trend that's, exploding right now.
Yeah, they're playing the long game.
Smart.
So here's how I see this contrarian trade playing out. Smithfield's IPO is going to be, grabbing all the headlines, right? All the attention.
Oh, yeah, for sure. Yeah. It's the big story.
So innovative meats might just slip under the radar a little bit. Those mainstream investors, they're always chasing the, the shiny new object.
And that creates an opportunity for, the savvy investors who are paying attention and doing their research.
Exactly. We could potentially, pick up some shares of innovative meats at a discount before the market, wakes up and realizes their potential.
I like it. I like it. So as Smithfield's IPO, generates all this buzz and kind of, shakes up the packaged meat market, innovative meats could benefit from, that rising tide lifts all boats situation.
Yeah, even if Smithfield ends up, capturing, a big chunk of the market, innovative meats could still, ride that wave of growth and maybe even gain some market share by appealing to that, niche but growing segment of consumers who are, really into those ethically sourced, sustainable products.
Okay, so for the sake of this hypothetical trade, let's say innovative meats is trading at, I don't know, $20 a share.
Sounds reasonable.
Which is, significantly lower than Smithfield's, projected valuation.
Makes them a pretty attractive target for, value investors.
Right. So we're buying shares at $20, betting that, their unique value proposition plus, all the, market shakeup from Smithfield's IPO is going to drive their stock price up. Now, what kind of time frame are we thinking here? Like, is this a, quick flip, or are we in it for the long haul?
I'd say this is more of a medium to long-term play.
Okay, so we're being patient.
Yeah, we're not looking for, a quick buck. We're betting on, innovative meat's ability to, execute their strategy, build their brand, capitalize on those evolving market dynamics over the next few years.
So we're, contrarian investors with a long-term vision.
Exactly.
Now, the big question, what's our target price? Where do we see Innovative Meats stock going?
Well, if everything goes according to plan, they execute their growth strategy effectively, I think we could realistically see their stock price, double or even triple within the next, 3 to 5 years.
Okay, so we're talking, $40, $60 a share. Potentially.
Not out of the realm of possibility.
Now, those are some numbers that would make any investor happy.
Yeah.
But of course, we have to add that disclaimer. This is all purely hypothetical. Just a bit of fun, exploring a contrarian trade idea. This is not financial advice.
Definitely not. We are not recommending that anyone buy or sell any specific stock.
Do your own research, folks.
Yeah.
Talk to a financial advisor. Make informed decisions.
All that good stuff. All right. Well, that wraps up our deep dive into the Smithfield Foods IPO and, our little speculative adventure into the world of, contrarian trading.
It's been a fun one.
It has. It really has. And, as always, we appreciate you joining us here on Talk Tickers. We're always trying to bring you the most interesting and insightful analysis and, make the world of finance a little bit more, approachable and entertaining.
Absolutely. We'll be back soon with more deep dives and market insights.
Until then, happy investing, everybody.